Good day. This is Arlan Suderman, Chief Commodities Economist at StoneX, with a look at today's commodity markets. And as we open up, we do have a few things that are moving to markets this morning. First of all, on the energy front, we're seeing prices down by several percentage points as the market reacts to reports that the United States and Iran may be close to a new Iran nuclear deal that might lift the sanctions on Iranian oil, increasing the supply. That combined with the ongoing lingering concerns about demand, some demand projections softening as well because of the tariff war that currently is going on. The stock market may have bounced back above levels that we've seen since before the reciprocal tariffs have been announced, but the commodity markets are still very concerned about long-term demand and whether we're going to slip into a recession with this tariff war or not. It's interesting to note the big news to start the week that saw the big increase in stock indices was that the U.S. and China had actually reached an agreement on tariffs. And what it basically boiled down to was a 90-day pause in their tariffs, U.S. reciprocal tariffs going down to 30%, while China lowered its retaliatory tariff down to 10%. So essentially a 90-day pause when you consider how far they came down from 145% and 125% respectively. So it's no longer an embargo. Products can move. And as a result, we've been watching, and I anticipated that we would see an immediate surge in demand as retailers say, we don't know what's going to happen during this 90-day period. We don't know if tariffs are going to go back up to their old levels again at the end of the 90 days because U.S. and China have not reached an agreement. So we're going to take action now. And U.S. retailers are already thinking ahead to Christmas. That means they want to stock up for the Christmas season. Now, some of them aren't going to be able to hold all of that inventory. Others will be able to. The big box stores, for example, will have a better ability to do that than the small family-owned retail shops. But that's what they're going to work on doing. And as a result, we've seen container orders for shipment from China to the United States increase 300% this week. So a big surge in demand for products coming from China. That has also increased freight costs as well. So some of that will also be working into those inflation expectations. And we did get the producer price index information coming out this morning with numbers moving in the right direction from the standpoint of decreasing inflation. It was interesting to note that the goods inflation is almost in a deflationary mode, where service inflation is where the real concerns are continuing to go forward. And the tariffs have been primarily on goods to this point. The primary exception of that would be President Trump's proposed tariff on movies that are done overseas, but that hasn't even been implemented yet. So most tariffs have been on goods. That's where we're generally seeing prices, I can't say going down, but inflationary pressures softening, shall we say, overall. So we'll have to see how this continues to play out as we go through the next couple of months. That is a lagging type of an indicator as the data comes in. So that may be where we're seeing it, but for now it's looking good. Consumer price index earlier this week was similar in nature as well. Now, as we look at the grain and oilseeds markets, we are seeing a big move to the downside in soybeans this morning as they follow soy oil down, as we're seeing a big move there as well. Generally, soybeans down about 2.5%. Soy oil prices down sharply as well. And it's largely on disappointment in the market on what it had built in the way of expectations regarding the biomass diesel production mandate from the EPA. EPA still hasn't released that number, although we do know that they have submitted their recommendation to the White House Budget Office, the OMB. And that's the next step in the process. And frankly, that should be encouraging that we're seeing that happen. Now, it's rumored that the recommendation came in around 4.6, 4.65, somewhere in there, billion bushels. That's really kind of the high end of what we expected. We expected something in the 4.4 to 4.6 billion gallon range. And that's a big increase from the 3.35 billion gallons currently. But the trade was pretty well tied to the number. that the industry had recommended to the EPA, which was 5.25 billion gallons. Now, it's still possible we'll end up with something close to 5 billion gallons, but our expectation continues to be somewhere between 4.4 and 4.6 billion gallons. As I said, the rumor was at the top end of that range. The other thing that disappointed the industry was that it felt like a decision was imminent by Memorial Day on what that volume is going to be. And then Lee Zeldin, who is the secretary of the EPA, in testimony before Congress yesterday, when asked specifically about when we'll hear what the mandate will be, he said, we're going to be working on the rulemaking over the next couple of months. Well, the markets interpreted that as we're not going to know anything for the next couple of months. But really, what he said isn't anything different than what he's been saying lately, that we should have something coming soon. And so the market was disappointed again, leading to a sell off because the funds had built some pretty significant length in soy oil and to some extent soybeans on the expectation of hearing good news. And it looks like that may come later than what it had expected. And that's frankly been the way that the funds have traded the soy oil market over the last couple of years, getting ahead of themselves and then selling off and then jumping back in and then selling off. And so that cycle continues. But overall, we are looking forward to this being something very positive for demand for soy oil going forward. We think the industry is going to see some good support from the Trump administration. It's just taking more time than what the industry had hoped for in getting that announcement. As we look at corn and wheat, we're seeing a little bit more strength there. Some of that spread unwinding, some of it's bargain buying. But a little bit more strength. But overall, fairly quiet now as we approach the end of the week going forward. Generally favorable weather for the Midwest. Good planting progress over the last couple of weeks, and now the rains are starting to return. We'll have to see if that delays planting of the rest of the corn crop significantly. For now, it's not really a concern. So that's today's update on the commodities for the energy and the ags. And I'll be back with you next time for another update on our commodities.